Welcome everybody. This is the Thursday evening Viper Trading webinar. If you're here to learn about trading the futures markets using the Viper tools, you are absolutely in the right place. First, we have to get the disclaimer out of the way, so let's knock that down and get straight away to some charts to look at trades. Tonight's topic is successful trading mindset, overcoming fear. Should be a goodie. All right, all communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room. Oh, my goodness. Oh, geez, I'm sorry. Ooh, wake up, have some coffee. Where did I leave off? Nothing contained in this webinar, other webinars, including live trading room, should be construed as investment or trading advice. And of course, everybody knows that you do trade at your own sole discretion. Alrighty. Yeah, let's get over to a chart. And I want to start talking about some things here. I don't know that we've specifically covered this topic before, the whole notion of let's get over to screen one. I've got a crude oil chart up there just waiting for us. Like this. But before we dig right into trades, I do want to have a discussion here, okay? First of all, I want to take a quick poll of the team before we get too deep into this here and say, on a scale of 1 to 10, 10 being the strongest confidence, like very confident, and 1 being the weakest confidence, lowest level of confidence being 1. Every morning or afternoon or evening, whenever you trade the markets, whatever instrument that is, when you start off trading, you're looking at your charts, you're just getting ready to maybe take your first trade of the day. Maybe it's the European session and you're trading the currencies. It doesn't really matter. Go ahead, let's type in a number. You rank your confidence level when you enter the trading session and you're ready to take trades. Is it an 8? How confident are you? And when I say the term confidence, I'm referring, think of it in its broadest sense. Confidence in terms of, am I going to make money today? Is today going to be a good trading day, or am I going to struggle and get all beat up? Now, if you're falling into the latter camp, feeling like you're going to struggle and get all beat up, then you would have a very low confidence level, perhaps under 5, right? If you got a high confidence level, not to the point of being overconfident. I don't want to say everybody's, just like, I don't want to put any caveats on it. Just how confident are you when you get ready to take trades? Mildly confident? You feel like you kind of have a pretty good idea what you're doing, and you're going to work with the same, charts and the same instrument that you know pretty well, and so you feel like you can knock her down? Or not so much, just to be honest. All right, now, wow, look at this. What a mix of numbers. This is really perplexing to me. I must say I did not anticipate this. Now, there's a whole slew of 5 to 6s, which is kind of middle range of confidence. Pat and Mark came in sort of in the middle of the range. Brent is up at a 7. Jeff D says 50-50. I'm kind of guessing that's around a 5, sort of the middle there, Jeff D. Oh, now look at this. David D says, I feel like a 7 confidence level in the pre-open, but only a 4 or 5 after the equity markets open. Really? Huh. Well, we're going to maybe have to dive in on that one. Roger's at a 6. Now here's interesting from Mario. Mario's comment is, by the way, a few people are just coming in. If you're coming in, we're, hey Terry, welcome. A few more people are coming in. We're typing in our confidence level between 1 and 10, 1 the weakest, 10 the strongest, on how we feel when we're getting ready to trade each day. Now Mario's coming in at an 8, and he says, I feel confident, which gets confirmed when I have a good trade, and then I get too confident, and sometimes I get a little too aggressive on trades. Well, that's the flip side of overconfidence, right? You sort of get like, what's that, playing with the house money? I made a couple $100, I can afford to take a little more risk. So we got to learn to fight that too, right? You don't want to get sort of at the extreme level where it's like, I can do no wrong. Michael P -5. Oh, good Lord. Lots more 4s and 5s. Peter, Joseph, and Jay, 6. Peter saying, coming in the room, still trying to get confident enough to live trade. So what do we do? And I'm just going to take a minute because we got the whole hour in front of us here, and this is really, really important, probably more important than most people think, is how do we get you whatever state you're in, whether it's a 4, 5, 6, 7, 8, or whatever confidence level you're at, how do we get you individually as a team here, collectively, of course, to feel more confident? What's it going to take? Looking for ideas. I have some ideas, obviously. I've given this a lot of thought, of course, but I'm interested to hear. Look at yourself. Pretend you're looking at the mirror at yourself as a trader. What is it going to take to get you from a 4, 5, 6 up to a 9? Where you're just solid. Every day, every morning, whatever, you come in there, it's like, I don't care what this market's going to throw at me, I'm going to nail it. How do we get there? Think about it for a second. How are we going to get there? What is going to change to make that happen? I mean, listen, look, I can spend 50 minutes going through trade after trade after trade after trade, and how many years have we done that? I think it's 8 or 9 years. I mean, I logged in the other day, I don't know how many thousands. I mean, literally there are thousands of webinars that we've done. And I feel like sometimes, truth be told, between us, here tonight, I feel like sometimes we just keep talking about the same thing over and over again, and I don't know if anybody's moving forward. I think some people, some traders on the team, you get some nuggets, right? We'll do a webinar, we'll do a room, and then you come away with some nuggets that you learn something, but then I don't know if that's actually playing itself out in the market. Is it manifesting itself in trades? Are you making money with it? Now, we got some great feedback here. I'd like to read some of these. Hey, Lee. Welcome, buddy. I didn't see you come in there. Let me read some of these, okay? I think the team might benefit from some of these comments. Hold on. This thing's acted up on me. Give me 1 second, please. You are driving me crazy. I'm trying to expand it so I can read these. I'm sorry. Just give me 1 minute, please. Okay, there we go. All right, Joseph's saying, for me to advance in my confidence level, it's going to be to know the methodology like the back of my hand. Okay. Jeff D, I need you to say long or short trade. I thought we pretty much say that most of the time. If we don't, then we're assuming it's obvious. Right? I mean, if it's a box at the midband that could go either way, I mean, I think 9 times out of 10 we say let it go both ways. For instance, in a downtrend, if we're coming up to a rollover means short. Everybody knows that, right? If you're in a downtrend and somebody says, I'm expecting it to retrace up into this 46.80 area and I'm looking for a rollover short, or I'm looking for a rollover up there and the trend is down, that is obviously a short trade. So hopefully, the trades are clear in the room. We try to make them as clear as possible. We're getting a lot of feedback. Let me read some more of this. Michael I is saying here, I use market replay a lot to practice. That's a good tip, Michael. I think a lot of people don't do that. You should go in and download market replay and record your data for the day and go back and do some practice. That's good for everybody. Carl G, a lot of practice, persistence, and learning 1 or 2 setups and staying with them for discipline. Mark says trading a consistent setup. Good. Peter W says, I can see when you're in a trade, but I'm not in it. I tend to join you in the wrong place. Now, interesting, Peter, why, and for anybody that does this, okay, let me reread that for you real quick. I can see when you are in a trade, but if I'm not in it, I tend to join you at the wrong place. So what that's telling me is you're getting in late. So I guess the question there is shifting the mindset from reactionary mode to, so for instance, when we're in the room, Gary and I are in the room and we're making observations of the market and trade calls and in and out and put your trail stop there and there's a good target, there's some support, it's probably going to bounce, we're going to get short covering. Okay, so it's a stream of consciousness that's coming out. Some people can accept that and deal with it, other people can't. So there's going to have to be a little bit of adaptation to it, so that when you're looking at your own chart and the words are coming at you, you can digest that as you're listening to it. And what I would suggest everybody in here and everybody listening to the recorders to do one thing. I want you to do one thing. I want you to try this. When you're in the live room, I want you to turn off the charts. In other words, don't have the visual screen up that shows the charts. Don't look at those. Why would you do that? I'm saying, but you should look at your own charts. So let's pretend that you're logged in tomorrow and you're trading crude oil, and 6 o'clock comes along, and you have this chart right in front of you, and it looks like this. Here's 6 o'clock right here. Okay, you're logging in the room. It's 5:55. Gary opens up the room, and you're looking at the same chart that he's looking at. Why would I have you turn off the screen but turn up the volume? Make sure that audio is good and solid so you can hear everything he's saying. Why would I say that? Why don't you just look at the screens in the room? All sorts of good stuff on there. Lines, right? There's lines, support resistance areas, all sorts, all manner of information. Why would we not want to do that? What would that change in your trading if you turned that part off but still listened to the audio and all you could see was your own chart like this right in front of you? That's all you looked at. What would that do to your trading? Mario, 3-4 people here, Jeff D, Mark, David D, Lee. So we can trade out our own plan, so we can focus, so we can say, focus on our own charts. Mark M here, I spend way too much time looking at your charts, and I have tried blocking your charts and muting, and so I can try to concentrate on what I see. Concentration, focus on your own charts. Exactly. Now listen, I've said this scores of times, and I know in the course of talking about all this through webinars and what have you, you know, it gets lost in translation. But here's what I'm saying. I'm saying, you know, if you're saying I can't see the trades, then what that's telling me is either one of two things. Either you don't know the trading methodology, so you don't understand where to get in the first part. So that could be one of the problems. Second part is you're relying too heavily on the room. So maybe you're staring at the room charts. Meanwhile, on your own chart, you're over here like sort of half paying attention to it. And by the time you come over here to take a trade on your own chart, say that you wanted to short up here and there was a call to get short. Maybe, I don't know, I'm saying hypothetically there was a short call up in here somewhere. By the time you process it, hear it, get back over to your chart to take it, guess what? The trade's already been entered and it's already down here. And now you're looking to try to hit some kind of market order to get in and chase it. So we can avoid distractions. Yeah. I mean, the whole reason we spend hundreds of hours doing the training is so that you know how to do it yourself. The room is there to confirm what you should already be seeing, right? So when this market came down into here, okay, it gets down into there, and then you hear a call of like, it's down here. I don't know, we probably called this, I don't remember, we called so many trades, but can everybody clearly see that there's some resistance levels up here? So the trend is down, we're looking for shorts, and we are retracement traders. For you, I see there's some people visiting and some new free trial people, and that's understandable. So the way the market works, of course, is that you have this notion of thrust and retracement. So the thrust move is always in the direction of the trend, which is down. So we're coming down, we're breaking support, the market, the backgrounds turn red. See all the bands in the mid-band are stair-stepping down. Let me turn the predictors off just for a second. Everybody see that? The trend is down. So we don't, and this is pretty clear, but some people still do it. You don't enter on thrust part of moves. Ever do that. You don't ever do that. That's like a golden rule. You don't ever do that. There is never any instance ever in your trading where you should take the trade on a thrust move. You will always, 99, 100% of the time, take it on a retracement. Now, if and when this market was to retrace, for us to take a short, where might it go to? Type in a number, type in anything. And I'll just state the obvious. We're looking to take a short. Now, as you're putting these numbers in, I'm going to just explicitly say this so that there's no confusion about it. I'm not going to mince words. I'm not going to say 32 words about it. I'm going to be crystal flippin' clear. The time to see the trade set up is ahead of time, predicting beyond the right-hand side of the chart, before, capital B-E-O-F-O-R-E, before it happens. So in other words, when a market is in a thrusting mode and you are anticipating retracement, do you sit there on your hands and just sit around thinking about, well, I don't know, maybe it's going to retrace, maybe it won't. I'll just kind of see where it goes. And wherever it goes, when it gets there, I'll decide what to do then. I have to tell you straight up, if you take that kind of lackadaisical attitude towards your trading, you're never going to make money consistently in the long run. You will eventually start losing. Because the time to start looking for a short trade is when the market is down here. That's the whole reason in the room where we call out numbers in the effect of, if this crude oil was to retrace anywhere up around 46.80 to 46.84, up around near the mid-band, and it rolls over, I will be taking a short. We don't say it's going to go, we don't call those numbers out when it's up here. We call the numbers out when it's down here. And why do we do that? Because we're looking ahead. We're thinking ahead. We're planning ahead. We're trying to anticipate what the market might and should do next. And in our minds, we're thinking forward to what we're going to do if and when it does that. Now just digest that for a minute. Just let that roll around in your head bone for a minute, okay? In your brain. Think about that, what I just said. This is where a lot of traders miss the mark. Because they're waiting for this to happen. Well, I'll be darned, Charles, look at that. They're sitting there, maybe you got a cup of coffee, you're sort of looking in the room screen a little bit. You know, you got CNBC turned on, you're petting your dog, you know, your dog woke up, they came in, they're sitting, your cat, whatever. You know, your parakeet's chatting with you. I don't know what's going on over there, but maybe you're having a breakfast sandwich because you're hungover from the night before. Who knows what you're doing? It doesn't really matter. The fact of the matter is the time to look for this trade and think about the trade is when the market's here. Not when the market's here. Is everybody clear on that? I just sense that sometimes, you know, we get all sorts of talk and feedback, and I get this feeling like, well, you know, these trades come and go, and I hear them in the room, and I'm getting in late. Well, I'll tell you what, if I had a nickel every time I heard that, I'd be a 10 gazillionaire. It's because it requires some forethought and work on your part. And let's face it, most people are lazy. How do I know that? How do I know that most people are lazy? You know why? I'm the king of laziness. I don't know anybody lazier and more procrastinating than me. I thought my daughter was for a while there, but she's not quite. Maybe she took it after me. Who knows why she turned out like that? But that's a separate topic. Excuse me. Mario says, yeah, I need to develop some more patience to wait for the trade setups. Yeah. Now, I'm going to get into this here, Mark, asking, so how do you get in these trades? Now, here, look. Here is the other part of your problem. All right? I've lived through it a million times. I know it like the back of my hand, better than the back of my hand, quite frankly. And I can't tell you how many traders I've talked to about this very subject. Now, I'm going to keep this really simple. This is a binary thing. I'm not going to pepper it with 42 different ways of getting into a trade. I'm going to make it this simple. If you want to have a really straightforward trade entry using Object Trader, if you don't want to get into the line, you don't want to put the ray on the chart, all manner of other entries, we got all these good entries that you could take, but let's just put that aside for now. I'm not saying forget about it. I'm saying let's just table it on the side for the moment. And let's boil it down to 2 trade entries. This is how simple this is going to be. And here they are. Bar close or box. Anybody not know what a box is in Object Trader? Does anybody not know what drawing a box is? It's okay. I mean, if you're brand new and you're just visiting us or you're on a free trial and you have no clue what we're talking about, it's perfectly okay to say, hey, Charles, look, I don't know what the heck a box is. What are you talking about, a box? Because I'll take a minute and we'll explain it. It's totally okay. Bar close or a box. Now, look. Here is where a lot of trepidation comes in when it comes to getting into trades. You're fearful. You're fearful, why? Because you're afraid you're going to get stopped out. Nobody likes to get stopped out. I don't like to get stopped out. Nobody likes to get stopped out. I have to tell you personally, probably more than 80 to 90% of the time, I go with the box. Why do I do that? Here's why. Let's blow this up. I want to get really detailed about this so that everybody's crystal clear on this. Okay, this trade obviously turned out well. I'm going to show you something that should theoretically help you in this area. I'm going to ask a favor. I see all sorts of typing coming in. I want everybody to put your hands off of your keyboard and listen to what I'm about to say. No more typing for at least 3 minutes, because what I'm going to show you here might save you a lot of money and turn your trading around so you start making money tomorrow. I wait for the second bar to form. What does that mean? Let's look at this situation right here. This is a bar close. If and when this market comes up into here, and it did at 6:34 a.m. Pacific time this morning, and this bar closed down, and you had bar close activated in Object Trader, you were filled short on the close of this bar. Now, you've heard me say a million times that there's no question that a bar close is a much more aggressive entry, and many times in the correct conditions, it can get you in at a higher, as much as 4 to 5 ticks higher than closing outside of a box. No question about it. The bar close box trader isn't filled until here. However, how many of you have turned on, and it's acceptable to type a yes or no answer to this, just real quick, but that's it, just a yes or no, not a 42-word answer to it, okay? Sometimes they get 42-word answers to a simple as yes or no question. How many of you have turned on bar close in conditions like this, and then only to get turned out to be stung, where it flips and goes up and takes out your stop? Is that you? Anybody here? You turn on bar close like this right here, you get in, and it doesn't go down like this one. Next thing you know, the puppy's running way up in here, and you get it stopped out. You get slammed, power slammed. And that is what makes you nervous. That is why you are fearful. That is why you're not confident. You think that has anything to do with it? You think what I just described here has anything to do with fear, trepidation, and lack of confidence in trading the markets and getting in late and getting in too early and not positioning yourself correctly here? Now I'm hitting the nail right on the head. I know I am. It's like having a sore on your hand and somebody puts the thumb, bam, right on it. That's it. Huh? I know it is. I know it is. I've always known that. Now that we know the source of pain, how do we fix it? This harkens back to what we talked about 31 minutes ago when we opened this webinar. What was the first question? It was about confidence. It was about fear. It was about how you feel about getting in and out of the markets, how you feel about taking these trades. How confident are you? How do we increase your confidence? Do you think that figuring this problem out will have anything to do with it? Right here? Guess what? It has everything to do with it. Everything to do with it. This is the heart of the matter. If you can't fix this, you're constantly going to live in fear of entry. You're never going to break through that hurdle. I don't want to sound like Mr. Negative say so, but how many of you want to fix this now? You don't want to drag this on anymore. You've been coming in for weeks or months or even years, and you're still stuck in sim mode, losing money in sim mode, and you can never go with live money. Every time you go with live money, you get spanked. You don't understand why that happens. You practice, practice, practice. You lose money. You start to make some money. You go in, you turn it on. Bam, you're spanked again. Dang it. What the heck? You save a little bit more money because you lost a couple $1,000s. You get your grub stake back up. That used to call it, so we called it grub stake. We used to call it that. You build your grub stake. You save some money so you can trade, right? That's what that is. You spank a little bit out of the account, couple, 300, 400, 500, maybe $1,000. You started off with, I don't know, 3 or 5 or 10, whatever the number is, but you're down. Put a little bit more in. Try it again. Bam! Spanked. What the heck? Is this some kind of torture chamber I'm stuck in? Now look, some of you might not at all like what I'm saying, and that's perfectly fine. But you got to rip the Band-Aid off. You got to rip the Band-Aid off. Because if you leave that Band-Aid on there and you keep nursing yourself through the same, all due respect, crap over and over again, nothing will change for you. It won't. Now look, I'm going to advance this chart a little bit here, and we're going to work through this together. And I want everybody to listen to what I'm showing you. Don't turn your flippin' TV off. Turn off your radio. Don't talk with your wife and spouse and dog. Focus on what I'm about to show you, because I'm trying to turn things around for you. You, collectively, everybody in here tonight as a team. I'm going to try to turn this around. Okay, we've discussed this trade. Let's move on. I'm going to start showing you a series of trades, and we're going to talk in detail about entry and how Peter says, I desperately want to fix this. I know you all do. Look, I know you all do. And that's what we're going to work on right now, okay? All right, let me advance this chart. I'll tell you what I'm going to do. Each time we do a setup together as a team, I'm going to clean the chart off because I don't want anything to. I have to clean the charts. Okay, just give me 1 second, please. Sorry, this is going to take a minute. What I mean is that I've got all these annotations on here. I don't want the prior drawing stuff to kind of cloud your judgment. And there, it's okay. Now I have a clean chart. Ready? Is this a trade entry right now, yes or no? Just look at it and type in a letter. If you wait more than 5 seconds, it's unacceptable because it's not in your subconscious and you can't make a quick decision. You should look at that and tell it yes or no. Yes. Bam. Y. Type in Y. No. Bam. N. Is this a trade setup? Yes or no? Right here. Right there. That's a trick question, by the way. I like to throw those in there once in a while. Let me turn the predictor back on. People are talking about, let's put the predictors back on. That helps a lot of people. Sorry about that. I had those temporarily turned off. All right, let me give it one more bar, and then you think about it again. How about that? Anybody changing their mind? All you knows? How about now? All you knows. Okay, one more bar. Okay, how about now? Okay, so let's look in detail what's going on, and I'm gonna go through these in excruciating detail until it's gonna feel painful for you. So painful that you know what? You're gonna remember it. Hopefully you're focusing on this. What are these bars doing right here? Right here. They're closing up. What happens on this bar right here? Oops, there we go. It closes down. A bar closing down in and of itself, does that constitute a trade? What did we just say not even 3 minutes ago over here? I took this off because I wanted to make sure to see if some of you remembered this. We just looked at this. We looked at this exact same thing, not even like 2 minutes ago. No. Now look, I'm going to say it again. There are traders who are aggressive in their entries and they go with bar closes. And it's okay. I'm not saying, I don't misunderstand what I'm saying. I'm not saying don't ever take a bar close. That's not what I'm saying. What I'm saying is if you want to trade retraces and you want to do it in a safer manner, you have to wait for the second bar to form. You have to do it. Because everybody, probably 2/3 of you in here tonight typed in, when I did the description up here about you get sucked into these bar closes and then you go up to get stopped out on a flip and it whacks you out, the same thing happened right here. Same exact thing. On the second bar, forming, I draw the box. Look, you can trade this however you want. Seriously, I mean, you can get in bar closes, and you know what? The ray and the line tool are very good, so I don't want to misconstrue what I'm saying here. I don't want to say don't ever use these tools. There are other good tools. I'm trying to solve one problem. One problem is getting in too early on a bar close before the market has shown it, revealed itself, that the trend continuation is down. Now, almost everybody in here tonight, when I asked this question, said no on the and typed in mid-band, which is telling me that you are waiting for trades to get somewhere up in here. This didn't ever get close to up in here, and it rolled over. Now, if you are nervous taking this type of trade that only gets maybe halfway to the mid-band, you're nervous doing that, whether you do a bar close or you box it in and you start making money taking those trades, should you do this trade? If you're nervous about it and you can never seem to get it right because it looks like it's retracing, you get a head fake, and next thing the thing goes all the way to the mid-band where you wanted to get in at the first place. On these little shallow retracements. You know what I'm talking about, right? Shallow retracements. Big, powerful downtrend, comes up, breaks stealth by a couple of 4 or 5 ticks, then rolls over and bam, and you're chasing it and you're angry about it. Don't take the trade. Just because this is a bona fide trade setup that actually turned out good and made some money, does that mean you have to take it? No. You have the power to choose what trades you take. You have You are holding the mouse in your hand. Nobody is forcing you to do anything. If, in fact, you are most comfortable with mid-band market up around in here, looking for retracements up into here, then by all means take those trades. If you're telling me, look, Charles, on a scale of confidence down here, my confidence level with this is like a 2 or a 4, not even a 5. I'm nervous. When this thing comes up here, even I put a box on it and it closes down, I am fearful that I'm going to get whacked. I just can't take those. They freak me out. Well, then guess what? Don't take them. Nobody's going to force you to take that trade. And you know what? If you miss it, is it the end of the world? Is there no more trades going to come? Here, let's do this. Let's keep going. Ready? I'm going to show you another one. Hey, listen, I don't mean to, I don't mean to be all offensive to anybody here. I know I'm kind of being a little gruff, uncharacteristically a little bit gruff tonight, but I'm trying to do it for a reason. I'm trying to do it for a reason because, so many traders, and I know it's a lot of you in here tonight on the team that are just, you're trying your best, you're trying your best, you're trying your best, and for whatever reason, you're still struggling and you just can't do it. And you keep failing and it's frustrating as heck and you want to do it. You got to make some changes. You have to change what you're doing. You have to. If you don't make any changes, you're going to be stuck that way forever. Right? All right. Let's move on. Next trade. Okay, get ready on your Y and N button. Is this a trade? Yes or no? Here's your mid-band. All you mid-band traders, all you traders have been sitting back typing in mid-band, Charles. I want the mid-band. I'm Mr. Mid-band, Mrs. Mid-band Trader. There it is. There you go. You got your mid-band. There it is. Kissed it perfectly. Look at the wick of that candle. It's beautiful. Maybe in the room somebody said, I don't know if it gets up around 63. Get ready for a roll. Important two-letter words. A roll. Short. Now, when somebody says that, does that mean when it hits 63, take the short? Is that what that means? No. The operative word is roll. Okay, I think people tend to overlook that. They go right to the number. They hear a number, and then they shut the last part of the sentence off. Right? Hey, I heard 63. And then I heard some mumbling in there, and then I heard the word short. There's letters and words in between that are important. Now, I love the spread of answers we got here to this. This is textbook question. For those of you that are fearful and struggling with this issue, this is a textbook study in this issue. I'm going to say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. At least 10 of you or more have just typed in yes. A small handful of you have been paying attention. I'm not going to name names, but have said, yes, there is a trade, but I'm going to box it in. Let me see who. Mario, Peter, can I have one more bar? Not yet. Mark, box it. Chris, good for you, Chris. Carl, not yet. Box it from Mark. Can you answer my question? Pat, I'm trying to cover a lot of stuff here. I'll have to, Pat, I'm sorry if I missed your questions. My sincere apologies. I'm going to ask a small favor. Please let me get through the rest of this. In the last few minutes, I'll circle back and answer your question if you can type it in. Okay? Let's just table questions for now. I'm kind of on a roll, so bear with me. Okay, Pat? Thank you. Let me give it another candle. How about now? How about right now? All the people that typed in yes. What do you, okay. For all of you, there's a dozen of you at least. I didn't add them all and count them all, but here's you bar close traders that said yes. How are you feeling right about now? How you feeling? All of you that typed in, yes, this is a trade right here, are going deep underwater up in here as it retraces right in your face. Why was this not a trade? We just talked about 2 of them in the last 10 minutes. I'll show them to you. Right here? Don't you remember it? We just talked about it. And right here. How can that be a trade? How can it be a trade? You're pissed off, you're stopped out, and you got spanked. Why? Because you didn't box it. You took the bar close. What did I just say? I said you have to wait for the second bar to form. You can't draw a box like that. You can start to draw it here because you have a wick of a candle to engulf. Yes? And if in fact this was going to close down, it would have to close below the wick of this bar. That's how they work. And then, and only then, would you have been filled short. You would have avoided all the pain and a full stop out. Now, in this scenario, did it pay to use bar close or a box? To wait for the second candle to form, draw the box, and take the short. Which traders paid off? Did it pay off for here? The boxers. Don't overanalyze this. I'm trying to keep it as simple as possible. Look, we can look at all manner of 15 bars back here and talk about what the price of T was on last Tuesday. It doesn't matter. I'm trying to show you a simple concept that you can use immediately. You don't have to go think about it. This is simple box object trader, wait for the second bar to form strategy. That simple. There is no more to it than that. Don't try to overcomplicate it, looking at all sort of bars all over the place. It's really that simple. I'm going to clean the chart. Let's do it again. Ready? We're going to do this over and over until you get it right. You know why? Because I'm asking you this. Do you want to make money? I don't know of anybody in this room that would type in no to the question of, do you want to make money, yes or no? And you know what? If you do type in a no, in all due respect, maybe you shouldn't be here. You're doing all this to make money. Not to stare at charts all day long and try to figure out what to do and get stopped out. You're there to make money. And I'm showing you how to do it. Again, one more. Ready? I'm going to make them harder. I'm going to make them a lot harder. Because you know what? They're not all like that. That was a couple easy ones. Ready? Here we go. Here's the next one. Stand by. 1 second, please. I'm trying to tee it up for you. There we go. Is that a trade, yes or no? 5 seconds. 3 seconds. Type, bam. Yeah, why? Bam. No, N. Right-hand side of the chart. Is that a trade, yes or no? You're at the mid-band. Hey, somebody in the room said, if that thing gets to 56, I'm going to take a rollover, in capital R, rollover, short. Trend is down. I'm looking for shorts, and you're right at the mid-band. Is that a trade? Yes or no? Hey, you just hit 56, 58. I hit market order. It's time to get in. I'm telling you, it's going to roll, and you're going to miss it. It's going to come all the way back on here to 35. I think that looks like a pretty good trade. I'm sure I'd be hitting market order right there. All right, here we go. Let's advance the chart. Ready? There's the next bar. There's the next bar. There's the next bar. I don't think anybody said yes. Oh, wait a minute. No, a couple of you said yes. Really? Really? You have to be kidding me. And I don't, please, all due respect to everybody here tonight, whenever I say, I am not insulting you. I am not insulting you. So please don't ever take that. I am trying to do this in the most informative way that I can. Okay? The most informative way that I can. I'm trying to do this to help you. This is absolutely not a trade. No! That is even worse than saying that this is a trade. At least over here, for you, those of you that said yes, the bar closed down, you had some justification to say yes. But if you said yes over here, the bar's still going up. You don't even have a closed down bar. This is absolutely a no. Beyond reprehension of no-ness. No, 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 no. You don't have a bar closed down and you don't have a second bar to draw a box. How can you take that trade? I don't care if it's sitting on 10,000 predictors. It doesn't matter. Price action is what matters. You have no confirmation that the downtrend is continuing with the bar closing up. Now, do you? Do you? There's not even a bar closed down, let alone a second bar to draw a box. The bar closed up. This is absolutely reprehensibly a no. Again, next one. You know, we can do this 1,000 times until you get it. In fact, for some of you, that's what it, quite frankly, and here again, I'm not insulting anybody. That might be what it takes. Ready? Here comes another one. Here we go. I'm going to mix it up now. It's not going to be easy. How about now? Yes or no? Hey, listen, if you got questions on this, I think I've made it very clear in the last 15 minutes that we're going to table all the questions for the end. We're focusing on the lesson, which is figuring out how to get you from being stopped out and fearful of taking trades and learning how to take them. Until you get every single one of these 100% right, we're not going to answer any questions. Not going to do it. Look, I'll table some time here in the next before we close, I'll table some time and circle back and answer some questions. But if you're going to type in 30,000 questions when I'm trying to show you this, then shame on you. You should be listening and focusing on this chart. Is this a trade, yes or no? Is it? Look, there's 1, 2, 3, 4, 5 bars right at the midband. Yes or no? 3 more seconds. Hey, listen, nobody's going to be sitting there tomorrow morning when the live market's flying all over the place and you're hearing trade calls coming at you like a steamroller, patting your little bottom and saying, hey, it's okay. Maybe you should take this. Maybe you shouldn't. Look, you got to step up and take these trades yourself. You got to know what you're doing. Market's not there to hand money to you. Good. It's time to box it is the answer. No, this is not a trade. Did it close below here? Any of these candles, did they close down? Those of you who said box it and the trade has not closed and set up yet is correct. There was never a close outside of this box. So now you got bar closes in here. For you bar close traders, and here again, there are appropriate times to use bar close. I'm not saying don't ever take a bar close. That's not what I'm saying. I'm saying in this particular condition, when you have a consolidation around a midband or support or resistance areas, sometimes the bar close can get you into trouble because it will suck you into a trade, then roll over or go up and stop you out. And if you're fearful and getting sucked into those, you need to stop doing that. This is how you do it. Right here. This is how you do it. How about over here? I don't know how to make this more clear. Here's a bar closed on. Is that the trade? No. You wait for the second bar to form. When the second bar forms, you step in and you take your box. You get filled on the close outside the box. It's that simple. That's it. If you want to do this type of trading that I'm showing right here, that's exactly how you do it. You have to wait for the second bar. You have to. You can't take this bar. You can't take this bar. Can you take this bar? No. Can you take this bar? It's closing. Hey, Charles, look, man, it's closing down. You better get in. Now, eventually, for those of you that got into bar closes, you felt some heat, but this one probably didn't take your stop out. Maybe it got close to. It's hard to say, depending on where you got filled. You might have stopped you, maybe it didn't. Now, if you extended this box over, yeah, you eventually got into a trade. Here. No, maybe you got in. It's hard to say. Maybe you got in this one. Maybe that stopped you out. Maybe you didn't. And then you definitely got back in here. Hey, look, it's not, nothing's 100%. What I'm trying to do is take your percentages up from, say, less than 50%, maybe up over 60 or 70 or 75, pushing 80%. We're trying to get you up into high percentage trade entries. That's how you alleviate the fear. That's how you build the confidence. Look, occasionally you're going to take a pop, all right? The key is to minimize it. If you got filled here, did you have to leave a 12-tick stop all the way up here? And the bars are reversing on you? Bars stops way up here somewhere? This thing flips and starts coming back in the box. How often does that happen and you dump it? You take a quick 5, 6, 7 tick pop here. Yeah. I mean, you heard me say it too, right? It rolls. I put a box around it. It head fakes down a couple of bars, doesn't hit the target. Do you think I leave my stop sitting way up here? No. If I see this kind of price action, my stop goes bam right there. Bam. Out. I don't think twice about it. There should be no thinking about that. If it doesn't move in your favor immediately within a couple of 3 bars and it's bipping back up and coming out, taking out the top of the box, you should be dumping that puppy as quickly as possible. Because why? Because there's another trade that can make you money coming right down the pike. Right? If you're sucked into a hope trade and sitting around waiting for it, all right, you get the idea. Let's move on. Okay, let's try a different instrument. I'm getting ready to run out of time. Okay, let's do one more. Let's do 1 or 2 more, and then I'll take all the questions, okay? Here again, my apologies. I'm not trying to be a jerk tonight, so hopefully nobody's taking it that way. I had to be a little bit harsh and gruff for everybody to pay attention to try to get this. You know, I'm just, you know, and I'm sure some of you are frustrated too, right? You know, you've been working on this for a long time. You want to make money. I don't blame you. You got to pay attention, and you got to do what you got to do. You got to do it. Otherwise, you're going to be stuck. Listen, I was stuck there for a long time. If anybody knows about being stuck, it's me. When I finally started changing things, that's when my trading turned around. I changed what I was doing. Ready? Here we go. This is YM. We'll round this out with a couple of tough ones. I'm not going to make these easy at all. These are going to be some of the toughest ones you've seen tonight. Ready? Here we go. There's YM. Is this a trade over here, yes or no? We're running out of time, so you better be, all due respect, cast your votes quickly. The polls are ready to close. We're running out of time. If you want to participate in the rest of this session, please type in your answers quickly. Thank you. Look at the condition of the market. You're on the mid-band. All mid-band trades are good, right? Doesn't matter. Mid-band trades are wieners. Hey, after this one, I got a gold trade for you. So let's move through this quickly. Boxing, not sure. In a range. Anybody saying I'm in a range? Okay, this is another factor, and it goes without saying. You have to take this into account, obviously, right? Here's resistance, and here's support. You know, here's support down here. So you're in a range, right? The mid-band's in the middle of the range. So, you know, there is a little meat on the bone. You could box this. It's probably, from a percentage standpoint, given the fact that you're kind of in the middle of the range, there could be a little bit of inclination to a head fake, like this, where it looks like it wants to go down and check that support level, and maybe it doesn't. Maybe it wants to come back up to the top, maybe it doesn't. These are higher risk trades. When you're in the middle of the range and the mid-band's in the middle of the range, these are higher risk trades, higher risk of head fakes and stop outs. So first of all, we don't leverage up here, right? We're not going to leverage up here. If you're going to dip your toe in, go with 1 or 2 and keep a tight stop on it. Okay? Yeah, there's a lack of a trend because you're in a trading range here, Lee. That's right. Okay, so you have to factor that in. That all comes into play. Earlier, we looked at what we were looking at there. It was crude oil, right? It was in a clear downtrend. Powerful, strong sell-off. So we're jumping in. We're getting in. We're boxing it. We're getting in. We're waiting for the second bar. We're getting in. Get stopped out. We jump. We box it. Get back in. All right, I'm going to show gold right now, and then we're going to wrap. I'll take questions and then wrap. All right, here's the current gold chart in real time. This is where gold is at right now. Is it a trade, yes or no? It's the final question. Cast your vote. This is the final question of the night. Here's gold right now, right at the mid-band. It's looking a little juicy. What do you think? Any takers of gold here? Let's fire up OT. Let's get OT on this chart. Fire it up. Let's get ready to take some trades on gold. It's right at the mid-band. You know it's going to go, right? I'm going to dinner, says Mark. Stay away, says Peter. No trade for me. Nope, 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 no way. Joseph, Brent, MG, Chris. Everybody here is no, 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 no. Good. Good. Listen, we know all mid-band boxes are not created equal, right? Negativo from Carl. Okay, good. So here, here's the other part of it, okay? And you know, for those of you who've been around for a long time, we've done entire webinars dedicated to this topic. There are good boxes and bad boxes. The tighter the box, the more concentrated it is, located at or around the mid-band in a nice consolidation pattern, constitutes a good box. If the box is too large and not clean, now what do I mean by not clean? What does not clean mean? Well, here's an example of a borderline box. Okay, this is almost getting too big. And see how the tops and bottoms aren't clearly defined really that well with the wicks and the bodies of the candles? Here's another one right here. Now, if I were you, I would spend a little bit of time, and it's worth it, trust me, studying the formation of these boxes on your chosen instrument. Sometimes they're good, sometimes they're not so good. I have to tell you, gold is notorious for some chop. So what does that mean? Well, here's what we're talking about. If you were to draw this box, do you draw it like this? And you might say, well, you know, Charles, I don't know, because, you know, you've got there's a couple of candles that kind of closed outside of that, and they're kind of, well, do you drop, is the box like this? Should that be the box? And then you look a little further back and you say to yourself, well, you know, just above and below the top of this box here, you got these swings here, Charles. I mean, you could get faked into a trade. And then the next thing you know, you're in it, and then, you know, it comes up to this resistance. You're in a range here. There's no, how much money, you know, if it breaks out through the top of the thing, how much money am I going to make? How much money would I make here before it hits something? How much money am I going to make here before it hits something? And then where does it stop? Stop the madness. Where does it stop? Huh? You go all the way back to here? Okay, well, let's ungolf this. No, wait a minute. Wait, hold on. To the left, I see more swing. Okay, look, here is the box. This is like that Russian nesting doll game. Anybody ever play that? Huh? Anybody, you seen that thing? The wooden nesting dolls? You have the little doll, you got the big doll, and you open the big doll, and there's a medium doll, and there's a couple of middle. You go all the way down, and here's the baby doll, right in the middle. This little tiny thing, right? This is a nesting doll. This is absolutely no trade. Absolutely, absolutamente negatory on the El Trado. No. So just to be clear, what I'm saying is that if you have a clean, nice, tight formation, we all know that that's good box. That's good box. If this was clean and the box was like that, that would still be acceptable, possibly even like this, if there was more meat on the bone to get to the top and break out, and more meat on the bone here. Very lean on the meat on the bone, yes? It's almost kind of a bone with a little scrap of meat on it. So it's a high-risk trade, yes? What do we say about high-risk trades? You got to be careful. Don't leverage up. Do them in sim. Put one contract on and keep a tight stop. All right, that's all I wanted to show. Hopefully this helped. Here again, I apologize. I don't mean for being so gruff with everybody. I needed to sort of get this off my chest and try to get everybody moving in the right direction. Please, please, please take what you've seen tonight and try to apply it as soon as possible to your trading as early as tonight or tomorrow morning. And I hope, do it in sim for a little while until you get a feel for it, and then roll that out to your live trading with one lot. Mario, thanks for coming. Mark, excellent. Lee, appreciate it. Anybody else? Okay, did I miss any questions? Let's circle back here. Please, 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 if you didn't get anything answered from earlier, now's the time to go ahead and type it in, and we'll take all the questions that you might still have on what we covered tonight. The whole goal, of course, is to build your confidence to where you're not overconfident, but you feel solid, you feel strong about a trading session, you feel comfortable in the trades that you're going to take, you've picked a chosen instrument that you know, you turned off the charts in the room so you're not staring at them and getting in too late. You're thinking ahead of time what the market might be doing. You're planning beyond the right edge. You're going to use that box tool as much as possible from Object Trader. You're not going to get sucked into bar closes when it's not appropriate. These are all things that we need to think about when we're trading tomorrow morning, yes? So please, 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 pinky swear with me, promise the team your solemn promise that you will take care of these things and take it seriously. Final questions. Right, David D. Michael I. Have a good one. Mario, appreciate you showing up. Yeah, Michael, you know, if everybody seemed to like this, I won't be so gruff next time. Next Thursday, I have a similar topic. Thanks, Jay. Carl, appreciate it. Brent, thanks for coming. Any more questions? David D takes a solemn promise. He's going to work on it tomorrow morning. Most excellent. MG, appreciate it. Lauren, take it easy. Anybody else? Well, no, Mark, let me step back here so there's no confusion about this, okay? Let me circle this chart back down here on crude. What I'm trying to say is that a more conservative entry is you wait okay, let's just recap for just literally 2 seconds here. When a market is in retracement mode, there is a tendency that the bars will close up, and you could even get an ABC pattern where they close up, they pull back a little bit, they close up, pull back a little bit. So it's an ABC, D, E, F, G, whatever. Bars are closing up, 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 up. When bars are closing up, it is telling you that what is this telling you? It's telling you that the momentum is still short covering. Short covering in a downtrend, it creates a natural updraft. This is not buying. People aren't buying this. They're buying in a sense of short covering it, right? So in a sense, they're buying back their shorts. But this is different than an uptrend where buyers are in control. So we need to understand the difference. Uptrend, buyers in control. People are buying the market, pulling back, getting better prices. It's like a good stock trade. Do you buy a stock trade at do you buy your favorite stock at a 52-week high? Or do you wait for it to pull back 10%? Which would you rather do? Here's Apple. Okay, I'm going to give you Apple stock. Just hit $143. That's an all-time 52-week high. Let's get a market order. Let's load it up. Let's get 1,000 shares. Come on. Or you look at the chart and you see that there's support down there at 139 where it broke out, maybe about 8%, but where it's at. Do you want to get in at 143 or would you rather get it at 139? So that's what we're doing here, right? We're doing exactly the same thing. So when we say we don't short thrust moves, we're not shorting here because that's not a good entry price, right? We would rather short it up here, right? We want to buy the stock at a good price. We want to get in the futures instrument at the good price. And if the momentum is still in a retracement mode, we have to wait. Now, usually one of the first signs when you get up around some resistance areas like predictors and mid bands is that the first signal that the worm is turning is a bar closed down. That's what we're saying. That's normally the first clue that this might be rolling into a potential down, a resumption of selling. That's what that is. In a downtrend, you're looking for a resumption of selling. In an uptrend, you're looking for a resumption of buying. Evidence that the market is going to continue in the trend direction. That's what we're looking for. And when bars start to close down after a reversal bar, that is telling us that are breadcrumbs and clues that yes, the momentum has turned and the selling is coming back. Now in this case, of course, the bars are blue because we're up here at mid-band and we're going up near the phantom area where all these predictors are. Now look, I know that when it gets up here and the bars turn blue above the mid-band, this freaks some of you out, doesn't it? Doesn't it freak you out when it gets up here? You're starting to think trend change. Hey, look at those blue bars. That's freaking me out. Downtrend's over. Background's changed to this opaque color. I don't know. How do I know that's not going to flip up and take me out and flip right in my face and spank me real hard? If you have a fear of taking this type of trade, then what should you do? I see 3 or 4 of you have typed in, yep, that's me. Well, then should you take it? It's like this one back here. Remember the shallow retracement trade? It's like this one. No different. Right? Remember the shallow retracement? It turned out to be a bona fide good trade, right? Right here, this is a bona fide good trade. Does that mean you should take it? If you missed it, is it the end of the world? Is this little trade the end of the world that you didn't get that little chunk of a piece of a final little push down? And you got retracements up into here and you got all manner of retracements everywhere? So what, you missed this leg? Really, that's the way you got to look at it, right? I'm not saying be flippant and blow off trades. That's not what I'm saying. I'm not saying be flippant and blow off trades. You have to know yourself, right? You got to know yourself. You got to know what you're good at and what you're not good at. And if you're not good at taking shallow retracements, then don't take them. If whenever a market comes up above the mid-band and starts going way up into here, even though it's a bona fide short phantom, but you get spanked every time because you misjudge it and it turns out to be a trend change and it goes up in your face, well then guess what? Should you keep taking that trade? Know thyself. All right, so I'll try to be more clear on this. Sometimes there was some confusion about whether a box was enabled both ways or whether it was just a short only. I would say a high percentage of the time, there's only 2 exceptions to this, maybe 3. The vast majority of the time, if you are in a trend and you're using these OT boxes, you want to box them in the direction of the trend, okay? You just do. If the trend is down, you're shorting retracements, you're boxing with short enabled only. For instance, here, if you enabled both sides, which you would not have done, but if you did, then yes, you get sucked into this. What would be the exceptions to that? Think about it for a minute. Where are times in the market or that we should be thinking about, even though there's a trend, we can box it either way? Market opens, pit opens, news events, inventory numbers, high energy times, 6 or 7 a.m. reversals. All right, so that's not a hard and fast rule, but I'm telling you a high percentage majority, probably 70, 75, 80 majority percent of the time, with the exception of the 4 or 5 things I just rattled out, you're going to want to err on the side of sticking with the trend until proven otherwise. Once the trend has changed, okay, so let's say hypothetically that this swing holds at the mid-band and it doesn't come down to this swing down here anymore. It doesn't, it stays above that. We're looking at crude in real time. This is crude right now, okay? We can see that we're at the top of the current trading range and we're trying to break up. Now, could you take this trade right now? Sure you could. What's the safer thing to do, though? Could you put a box on here? It's a pretty big one. And could you allow it to take the long? Yes or no? What do you think? Mark, I'm running out of time, buddy. We'll talk about NASDAQ in the morning. I'm going 15, 20 minutes over here. So I'm sorry. We can talk about NASDAQ in the morning, or I can table that for next Thursday. What's the safer approach here? You put the box on it, just like I've shown, let it break up and take the trade, yes? But what would be another alternative? Wait. I mean, more specifically than wait. Yeah, everybody could wait. I mean, that could be the response to every trade out here. Well, I would wait. Waiting for what? See, that's the problem I get a lot of times when I'm talking with traders, is there's a sense of ambiguity there. Okay, you're going to wait. Wait for what? What are you waiting for? There's some divine intervention going to come down, like your ceiling on your house is going to open up. Ah! All of a sudden, a mystical light comes down, and now you will now take the trade. You've been empowered. Yes, a thrust and a pullback. That's what we're asking for. This is the thinking ahead part. This is the not reacting part. The thinking ahead trader is over here. Your head's over here. Your head's not over here. I mean, it is temporarily when, of course, you put your lines in here and all that manner of sort of thing. You look at the trend and are you in a range? Okay, that's all done. Now our mind's done. We're looking at where we're at real time, and we're looking out this way. We're projecting out forward. What is likely to happen, and if it happens, I will do this. My mind is constant. That's where I live, right out here. Other than actually executing and taking the trade and monitoring the trade itself, my head, when I'm trading, is always, always, always out here, beyond the chart, edge of the chart. I'm constantly thinking about what could be happening next, and thinking about, okay, well, I see that, there's some resistance up in here and could pop. Maybe if I take the break, it'll give me maybe 5 or 10. Maybe I'll get a scalp, maybe I won't. But the safer thing to do is wait for it to come back. Check the support level. Consolidate perhaps in a little box. That's what we're always thinking, right? Give us a chance to pause here. Then bam-o, take the long trade. If you wait for this, did you miss anything? For the trader who got in here and got this break from the box, here's the trader that took the box break. And then the market does this, comes up to a resistance area, pulls back and does that, and the trader who waited did this. Did the trader who took the break, did they get anything on you? Huh? Did you miss anything by not getting that? All you missed was the heat. Yeah. All right, that's the way we need to be thinking when we're looking beyond the right-hand side of the chart. We're thinking out, we're over here, our head's out here. We're taking trades in reality because we have to trade in reality. We have to put our box, we have to get fill, we have to manage the targets and stops. This is reality. This is planning world out here. So what I'm always saying to myself is, yeah, sure, of course it could pop, but there is a high likelihood that at some point after wherever it stops up here, it's going to pull back here and find some support and give me a chance to get in. So in fact, I've missed nothing with that. In fact, I would submit to you that there is more risk taking a bar close and getting into a head fake where you get sucked into a long on a close above that box. Right? Here's your box break traders. Uh-oh, I don't want to go up. Blammo. There you go. You're stopped out. You have to think about what you're doing and whether in your assessment, in your mind, you're saying, is this a high likelihood trade or not? If the answer is no and you're not comfortable, then pass. Right? Is this a trade that I like and I'm good at? Is a high likelihood, is it at a place where I should be taking this? If the answer is yes, and you're running that through your head out here in future world, and it comes into your sphere of influence, your space, and it meets your entry criteria, step in and take the trade, and your entry percentages will go way up. If you're in uncomfortable land and you don't know what to do, then maybe you should look at another chart. Maybe you should find something else to trade for this particular next 10 minutes. Or maybe you should observe what happens here and then regroup. I'm going to stop the recording. Thanks for staying over. We had a little encore tonight. We went in about, I don't know, 20 minutes over. Hopefully this